CPI data came out and inflation's running a little hotter, a lot more sticky than the market's pricing in. Bonds sold off, TLT stock going down with it. What's next? What's going to happen with TLT stock? I played TLT stock quite a bit. I did not front run this one like I normally do, but I usually would have gone in and probably sold some calls on this because I felt like the information was going to be a little stickier given last Friday's non-farm payrolls numbers. So TLT stock has broken downward and it looks like it's going to start trending more. Bonds are probably going to be sold into the next several months. This will ultimately pressure stocks. I want to break down inflation. I want to break down some of the outlying factors that are happening. We've got some geopolitical in Eastern Europe and now, of course, Middle East, and how that's affecting the price of oil, which was one of the reasons why we saw some inflation numbers and what pushed TLT stock downward. Let's jump in. Here, starting off with TLT stock. This is a 3-minute bar chart. And towards the close, TLT stock actually went down a little bit further, but I had already put this presentation together, so I'm just going to ride with it. Fallen about $2. This is on the inflation numbers and also the sell-off in treasuries. There's an inverse relationship between treasury prices and yield. As prices go down, which would push TLT stock downward, yield is going up. And here's a look at a larger view of TLT stock. This goes back into the very, very tail end of 2023. And as you can see, we sold off considerably for a while there, bounced back up. Now we look like we're going to go back downward. The Federal Reserve, of course, raised interest rates considerably over a short period of time. This drove bond prices downward, pulling TLT stock downward as yields went up. They went from basically 0 to 100 as fast as they could to rein in inflation. And I've said this a few times, the Fed never gets it right. To begin with, it's kind of a moving target. So although they have pushed through a certain amount of increases, you'll get incremental changes and shifts within the economy. But there's something else that happened with the economy that the Federal Reserve probably didn't factor in, that it would be propelling the economy like it did, and that was the Anti-Inflationary Act that they passed, stimulus from the federal government. This has been pushing the economy forward. And so although the Federal Reserve probably did raise interest rates to a level that would have worked normally, there's this sort of 800-pound gorilla in the room that is pushing this economy forward. Inflation is still moving upward. And the pace, I think we saw a 0.5% increase month over month for core inflation. Multiply 0.5 times 12, you get 6% inflation rate without compounding. It's probably going to be about 7.5 to 8.5% with compounding. That's a little too rich. Here's a look at the US 10-year Treasury 10-year yield. Now, the TLT stock, of course, trades off at 20 plus. I always divert to the 10-year because this is sort of a good gauge between the 2 and the 20. It's the benchmark. This is where you start your comparisons. You ask the question, what's the US 10-year Treasury trading at? 4.53 and going higher. Therefore, when you're looking at your stocks to buy, this being your sort of measuring stick, you want more premium based on future yield for the next 4 quarters for any particular stock. This would mean that stocks are going to have to adjust downward to adjust for the 10-year moving upward. You want that extra premium because you're taking on more risk. Whereas the eventuality is the US 10-year Treasury is going to go back down, but we just don't know when. I've been saying for months that I felt that the interest rate that the Federal Reserve parked at isn't quite there yet. Moving forward, here's a look at the US CPI headline inflation. Now, there were 2 factors that really kind of pushed inflation this month, and that was higher energy prices and housing. Housing was the big sticking point, which really drove about 70% of the inflation we saw previously. And from what I'm reading, the other 30% was corporate profits. They basically just said, let's just go with it. Here's where I really start everything when it comes to my analysis. This is the core inflation rate versus personal expenditures. As personal incomes increase or decrease on a year-over-year change, you will see expenditures do the same. So you get incomes turn into expenditures. Those expenditures turn into revenues for companies, which ultimately turn into profits. As you can see, the blue line here, personal expenditures trending higher after bottoming out like they did. Inflation, as you can see from the red arrows there, or red line there, it will follow. There's a bit of a delay. There's a lag there. It is a lagging indicator. But as this personal expenditures start to continue to move back upward, this will prop inflation. We're starting to see it, but I also stress one thing. One data point is not an economy. We did see a pop up a little bit higher than expected. That's not the entire economy. This could be a one-time blip. It could be a one-time blip where it was only 0.5. Or we could start to see some slowing down. In the meantime, I divert to personal expenditures. It is trending higher. Therefore, the overall trend for inflation, as far as my analysis is concerned, is it will be higher. And I still say, and have been saying for months, the Federal Reserve is not where they need to be. They need to raise interest rates. Moving forward, crude. Crude came down a little bit today on the news. This is the daily chart. I mentioned this earlier. We've got some hot spots in the world. Middle East. We're pretty certain Iran is going to do something about as a retaliation to Israel. And I feel pretty certain that if they do try to do something, the United States will probably step in. That's going to make things interesting. This is a part of the world where there is a lot of oil, and that could shift the supply. So this is one of the reasons why we're seeing oil prices moving higher. Another reason, of course, is OPEC has done everything they possibly can to slash supply so the price would go higher, because previously it was around $70. And that just doesn't work for one key member of OPEC, Russia. Have you seen the price of cocoa? I kind of joked about this in my previous video that it was crossing 10,000, and I wanted to put a chart up. This is over the course of a short period of time, about a year and a half-ish, if you will, that we've gone up 300% from 2,500 all the way up to over 10,000, and it looks like it wants to clear that. There's some outlying factors there. There was a lot of seasonality with too much rain in Madagascar or whatever it was, basically wiped out the crops. So there are some other kinds of effects that are going to happen. We all don't eat chocolate every single day, so this isn't going to be a big factor, but nonetheless you can see there's other kind of things going on here. All right, let's take a look at these two charts. The chart over on the right, this is housing. That's your mortgage rate. Mortgages spiked up. They've eased off from the very peak, the most recent peak. Since that easing off, kind of reinvigorated the housing market a little bit. I expect the mortgage rate will probably trend back upward, which will shift the price of housing. Another factor in why inflation moved higher. The problem with housing is everything is so skewed. You've got so many people who are sitting on 3.25% mortgage rates. They're not doing anything. They're not going anywhere. So that supply effectively doesn't exist for the next, say, 30 years. Those homes will probably turn into rentals. There's just going to be this weird shift until more supply shows up. Housing stocks did take a hit today. XHB stock, the ETF for the home builders, did fall somewhat because mortgage rates are probably going to go higher, so affordability drops somewhat. My take on that is, yeah, we're probably going to see the mortgage rate trickle a little bit higher. You're going to see a peak in those stocks. Hopefully the home price index that you're looking at here does ease off somewhat. If it does, that will relieve some of the pressure on upward movements in inflation based on housing. Here is, actually this is the XHB stock, the housing ETF that I just mentioned, dropping. It was at 112 just a couple days ago, falling downward since the non-farm payrolls number that we got last week kind of moved a little bit sideways, and now we're starting to drop higher. I think this is synonymous with what's probably going to happen with the broader stock market. That what we're probably going to see is we've seen the peak, and you go back to that benchmark, the US 10-year Treasury yield. All right, 4.53%, moving higher. If you're looking at a stock that has, say, 3.75% yield, given its current price over the next 4 quarters, what the company could earn, you're not getting much premium there, but you do have a lot more risk. So stock prices are probably going to have to adjust lower given the new move in Treasury yields. Treasuries, of course, are one of the safest investments out there. Given that, stocks are going to start looking really risky moving forward. Here's one last thing. Looking at TLT stock yet again, I brought in the daily chart here so you can see. I'm thinking we're going to go sub 90 at this point because of the inflation numbers, and I think we'll probably challenge 84 at some point, but not in a big rush. I think that we've seen the recent peak in TLT stock, and this is basically what I'm going to be playing. I'm not going to get into this thing just yet because I want to see some kind of rebound in treasuries, which would pull TLT stock back upward somewhat. Then I'm probably going to get in and get real busy selling calls, maybe buying puts, putting on a position. This is what I call, or what's called in the industry, a risk reversal. You sell your calls, you buy your puts, or vice versa, depending on your avenue. Now, I always leave a gap between my calls and the puts and the current reference point, which at this point is 90.50. So let's say it's about $90. I may sell 94 calls and buy 86 puts, and I'm looking for a shift in a move downward closer to, say, 88 on TLT stock, which would mean my calls start to evaporate and my puts gain some money. And since it is a fairly even number away from the reference point, the 90.58 at this point, what happens is I basically don't pay anything. What I take in calls from selling those, I pay in puts. So if I do see a delta of, say, 0.1 move, that could really affect the price of the calls and puts, and I might take that money and run fast. But what I'm really waiting for next is going to be anybody from the Federal Reserve sitting there saying, nope. We just had the Minnesota president, who is not, I think the way this works, I'm almost positive, he's a president, so he's not a board member, which means he's not a voting member for interest rates, basically said he didn't see how interest rates could go lower this year. That was before inflation numbers. Now, the Federal Reserve, of course, does not necessarily look at CPI data. They look at the PCE index, which will come out the last week of the month. So the PCE price index usually mirrors CPI pretty heavily. So it's a little more sensitive than the CPI, but the CPI gives us a good idea as to what the Federal Reserve is going to be looking at in just 2 weeks, and then making their decision thereafter. In the meantime, we do get a couple other bits of information. Tomorrow morning, we're going to get PPI. That one came in pretty hot last month, and TLT stock sold off along with bonds as bond yields moved higher. Again, I'll be looking for a price movement probably closer to 91 to 92. Then I'm stepping in, I'm selling those calls and buying, say, maybe 87 puts. I'll keep maybe a $2 to $4 range in between, kind of give myself some comfort as markets move up and down, up and down. But eventually, once I get that one big move downward close to those puts, I'm taking that money and running. For my long-term followers, if you want, make sure to click the links down below. I am shifting away from my website to Substack. It's just so much easier. And I'm slowly pulling everything in. The link is down below. For those just finding my channel here, make sure to hit the like and follow button as well. Substack, there is a free email. I just put one out on the economics of what happened here and how that's going to shift everything. So you'll be able to see that up on my Substack page. Make sure to hit the like and follow button. We'll see you in the next video.